Hi, my name is Rishi Maheshwari, and I'm a Director of Investments at White Oak Capital. Today, we're going to be speaking about ESG investing. The core idea of ESG investing is to evaluate businesses on their commitment towards ESG factors and the process followed. The underlying principle lies in identifying and quantifying the intangible value which companies possess by being environmental friendly, socially responsible, and having robust corporate governance practices. The environmental factor covers the impact of the firm's activity on the environment and the ecosystem in which it operates. Few examples of the same are whether the industry or the company poses a risk to climate change or biodiversity. What is the waste management system and process at the underlying firm? And what is the management oversight on environmental practices? Social factors cover how the firm manages the relationship with its stakeholders. Few examples of the same include adherence to local labor laws, safety of working premises, the company's diversity and inclusion policies, and robustness of data protection system. Governance factors measures effectiveness of processes and policies pertaining to the firm's corporate governance practice and business ethics. I'll again cite a few examples, including accounting disclosures, related party transactions, integrity of board of directors, managing conflicts of interest. Successive corporate crises, globally as well as in India, has brought a consensus towards more responsible behavior from governments, corporates, and investors who now have the responsibility towards facilitating a transition to a climate resilient economy. Adherence to ESG ensures that there is sustainable growth, as it's only a sustainable business that has the potential to be superior, scalable, and valuable. According to a recently published report by the Global Sustainable Investment Review, the AUM of ESG focused funds has grown to approximately 35 trillion today, up from about 10 trillion in 2010. It is still early days for ESG investing in India. There is a clear line of sight for ESG focused investing to accelerate, spurred by active and evolving regulatory and reporting frameworks for ESG and the government's focus on digital transformation, which is acting as a catalyst in creating an equitable and inclusive business model. ESG is important for numerous reasons, and today we'll highlight a few of them. Starting with recognition of sustainable patterns optimizes capital allocation and opens new avenues for revenue generation. 2. Efficient and effective utilization of resources are ways in which corporates can reduce operating costs in a sustainable manner. 3. ESG creates a level playing field for corporates operating anywhere in the world. Further, companies that score high on ESG parameters will be less prone to regulatory risk globally. Lastly, any business which is socially and environmentally unsustainable is also unsustainable from a cash flow perspective. Given our investment philosophy and a strong focus on bottom-up stock picking, fundamental principles of ESG are naturally integrated into our investment approach and philosophy. We value businesses that follow industry-leading environmental practices, demonstrate ethical business conduct, and deal fairly with all its stakeholders. We at White Oak are signatories to the United Nations-backed Principles for Responsible Investing Initiative, or the UNPRI. We evaluate investments through a two-pronged ESG lens approach. The first one being a negative exclusion list, wherein opportunities are screened by giving due considerations to numerous factors that we would like to exclude businesses violating these principles, followed by a positive screening process to identify businesses that set a positive example of being environmental friendly, socially responsible, and exhibiting strong governance practices.